What I'm talking about today is structural tax reform. That means changing not the amount of money we raise. We've got to balance our budget. It's shifting between different types of taxes to get that right mix that's best for the state. So we're not talking about the amount of taxes, we're talking about the structure of the tax. You all have seen, I'm sure, in the last few weeks that it was announced that Georgia's per capita personal income is now 40th lowest in the country. Now, unfortunately, that's a trend. It's not an outlier. Our 10-year growth rate in per capita personal income for the last several years have been amongst the lowest in the country. I think the last time I looked, it was 48. Now, this isn't just a bad headline for Georgia. This is really bad news for our families. You know, if we have stagnant wages, it's not good for economic opportunity. It's not good for raising healthy families and encouraging a growing state. Despite this low growth, we think Georgia's economy is really about ready to take off. We've got a lot of things that are going right. And if we get tax reform right, that's one of the barriers that are holding us back. Let me talk a little bit about that. You all took off the sales tax on energy used in manufacturing. We're one of the few states that applied that tax. It's bad policy, and it's turned out to be great for the economy. We've already seen several announcements of jobs that have come to Georgia because of that. And we are poised as the reshoring of manufacturing and advanced manufacturing from China and other areas back to the United States. Georgia's in a great position to get those factories and create more jobs because of the tax reform that we passed a couple of years ago. That's what tax reform can do. But in addition to our strength traditionally in agribusiness, we think Georgia can be a real center globally for innovation. Let me tell you why. First of all, our research universities. We have incredible research universities. In fact, just last week, the incubator at Georgia Tech was named the number 2, not in the United States, in the world. Something as a Georgia Tech graduate, Senator Davis, we're very proud of that. That helps the state of Georgia tremendously. We're leading in many, many industries: aerospace, logistics, bioscience, regenerative medicine, financial transaction processing. How many people know that 65% of all the world's daily credit and debit card transactions in the world come through Georgia? It's amazing. We even have a Georgia-based company that's about ready to buy the New York Stock Exchange. Our rural communities are benefiting from our leadership in telemedicine and digital learning. We're expanding high-speed broadband, both wireless and wired, into all of our communities. And we believe that bold tax reform would give us that competitive advantage to grow all of these businesses. We have to be able to attract and keep talent. These businesses are based upon getting these talented people to come and stay in Georgia. High-wage jobs are going to follow those. We also want those successful entrepreneurs that Virginia was talking about to stay in Georgia and not change their residence to Florida. Not only do we lose their tax revenue, but we also lose their local leadership, their local charitable giving, and their investment. We talk a lot about the lack of early stage funding in a lot of the companies, the entrepreneurs that have good ideas that can't get funding here in Georgia, we lose them. Well, that's what these wealthy individuals do. They're the angel investors and the funders of a lot of these companies. But it's not just for the wealthy. It's also for small business. You know, throughout the whole state of Georgia, small businesses don't pay corporate income tax, most of them. The majority of them pay their taxes based on individual income tax rates. So an individual income tax rate cut is going to go straight to those small businesses. And we know those small businesses create more jobs than any other type of business. Finally, it's good for families trying to get ahead. Middle income families, 2 wage earners. We're punishing savings and investment. You know, the old American dream is to save money so your children can have a better life than you have. We're not really, for the first time ever, a lot of people are having doubts. And the more we save, the more we tax savings and work and investment, the less economic opportunity we have to get to the American dream. So why the income tax? If you look at the handouts, I looked at our neighboring states and the per capita revenues that are generated in all our neighboring states for our major taxes: the sales tax, corporate income tax, and the personal income tax. And what you'll clearly see is we are below average in sales tax and corporate income tax, and we're clearly above average with the income tax. And now that North Carolina's just passed their tax cut, that's become even worse. So we clearly have room, as Dr. Reese said, to rebalance. Second, again, the economic literature supports it. The Federal Reserve Bank of Atlanta did a study, and they said if long-term growth rates seem too low relative to other states, which clearly we are, lowering tax rates is likely to have a positive effect on long-term growth. We agree with that. It's also a practical perspective of staying competitive with other states. Again, with North Carolina, in your packet, we've outlined the experience that Oklahoma and New Mexico, Republican and Democratic governors that lowered their income tax rates over time. What happened, that's the biggest fear with these big tax changes. Are we going to have enough revenue? What's going to happen when we lower these tax rates? And you'll see it's been a very positive economic story. The growth in those two states has been very positive since they reduced those taxes. So what are the challenges? Unfortunately, state tax reform is very difficult. There's only been one state in the last 50 years that got rid of a major tax. And that was Alaska when they found oil in their state. A quarter of the states, including Georgia, have tried major tax reform in the last few years, and most of them have failed. So it is very, very difficult. What I've done is put together also a chart that gives you the trade-offs between the sales tax and the income tax. So if you wanted to, say, cut the income tax in half, or you wanted to eliminate the income tax completely, what would that mean based on our current sales tax base? What if we expanded it by about $1 billion, which somewhat what the tax council recommended? And what if we went closer to a fair tax, where you taxed all personal consumption? And you can see the current base, we made no changes, and we eliminated the income tax. That would require about a 10% sales tax. Now that doesn't include the 2 to 4% tax at the local level. So you're talking about 13, 14%. Now if we broadened the tax base, if we went to a fair tax, we might not even need to change the sales tax rate. 4% might bring in enough revenue to eliminate the tax. And there are all kinds of options in between. Those are the trade-offs that I think not only you as legislators, but the general public has to understand. The pros and cons of going back and forth. I've also listed a pie chart that shows you the services that we do not tax in Georgia. It's easy to think about when you're going to a fair tax or a consumption tax. There's a general rule that's pretty generally accepted that personal consumption is 70% of gross state product. So it's true nationally, it's true in Georgia. About 70% of our gross state product is spending. Of that, about 30% is taxed. So that means that 70% is not taxed. So those are primarily services, also groceries, of course, here in Georgia at the state level. So you can see there's a lot of room to expand the sales tax base. That's why we can do it 4%. But each of those taxes, when you're taxing an industry that's not taxed today, as you know, causes a lot of political challenges. The biggest ones that we have do not tax now: housing and healthcare. And I would throw in groceries. That's obviously not a service, but that's a big amount of revenue that is currently not taxed. So
are there some taxes on groceries?
There's a tax at the local level on groceries, but not at the state.
What do you mean when you say?
That is the issue.
What do you mean when you say we don't tax housing? What does that mean?
Well, that would mean if you went to a fair tax, when you bought a new house, new construction, there would be a sales tax on the price of that house. Now, when you sold that house to someone else, there would be no sales tax. Just like new cars, anything new under a retail sales tax is taxed, and then used goods are not taxed. So that would be a large expenditure. Now, do we need to do that when our construction industry, residential construction industry, is just coming back? Now, there would be some economists think there would be a windfall to people that have existing homes. Their values would go up because they're essentially getting a tax break. There are a lot of transition issues. But that's one of the things you have to contemplate, and I think maybe in future meetings we can look at each of these issues of, you know, if we went to a fair tax or a broader consumption tax, what are the pros and cons? The other would be for, say, an architect or IT services, things that are very easily done electronically. How do you administer that? Same thing with taxing purchases on the internet. What's going to keep me from firing my architect in Georgia and hiring an architect in North Carolina or somewhere else and trying to escape that tax? The fair tax people have thought through a lot of these issues, and they can talk about that, and I think that's something I didn't want to go into today, but those are some of the practical issues. We believe we need to do something. It has to be fair. More increase on a consumption tax can be regressive, and like the prebate with the fair tax, there are ways to deal with that. Also, when you expand the services, not a lot of lower income households that you'd be concerned about are hiring lawn care services or pet grooming services, those types of things. So when you really expand the base, it's not as aggressive as you may think. But there are issues that have to be addressed, but can be addressed with that. And it has to be simple. I think it has to be an open process, and people have to understand it. And I think that's why we're so excited about giving this information to the public and to the legislators. I mean, for the first time ever, the legislators have never had this type of information, not much less the general public. And I think it's going to be very powerful and educational as people, you know, everyone says, well, I think everybody I know has the idea of what the best tax reform plan is. Well, this is what you really need to do. So we can let them all go online and test it out. Say, all right, you need to balance the budget. Let's see how you do it. And let's debate about that. And I think that is going to be more effective at focusing the debate on important things than having a lot of misinformation floating around.